One of the things that we had done when we had formed a similar committee with the advent of Sarbanes-Oxley is we really wished we had the mechanism to have recorded for posterity those discussions. And we're honored here to have Jim McKinney, who is the MACPA historian. So from our standpoint, if it is okay with each of you, I'd like to get your permission to have this videotaped and to have an audio recording so that we can then refer to it in subsequent periods to understand what this discussion and this committee was all about. What I'd like to do is ask Tom to give us an update on the regional council that took place this week up in New York. And I know that there's some matters relative to your conversations with Rick Anderson that may impact our thinking on this project. Tom?
Thanks, Art. So a couple things. The AICPA, one of the functions of the Maryland Association of CPAs is to represent the profession at the AICPA level. It's kind of like Congress. So there are what are called designated members. Each state gets one designated member, which is like the Senate. And then there are elected members, which are members that are appointed based on population. So Maryland has one designated and 3 elected members of council, so 4 total. So they meet 3 times a year to talk about major issues, sometimes voting on them, etc. The AICPA
companies as well, and therefore you should address both situations at the same time through the FASB.
I'll say also, this is Jocelyn. The other thing that was in that report was a very good point that we touched on early in there and seemed to lose.
I wish we could have videoed the whole thing and had it as an educational component, because I know we've got members all over the place that have no idea that all of this is involved in the infrastructure of our profession. And you guys made that easy and a lot of work in a really short period of time. So, but again, thank you guys tremendously. This has been great. And we got done at 3 o'clock.
Oh, turn off the camera now.
Turn the cameras off.